Hey everyone, welcome back to the Deep Dive. We're going to be tackling something today that's been, I don't know, kind of floating around the internet and frankly generating some pretty wild conspiracy theories.
Yeah.
We're going to be talking about the world of BlackRock.
Hmm.
Have you ever heard of them?
Yeah, I'd be surprised if you haven't. At this point, they've become a bit of a boogeyman on certain corners of the internet, often portrayed as this, shadowy force
Right.
pulling the strings of the global economy.
Yeah, you see those headlines.
Yeah.
BlackRock's controlling the world
Uh-huh.
and all this stuff. And we're not here to indulge in speculation or anything like that. We're going to be unpacking some facts.
Right?
And we're going to be basing this on a really insightful video
Yeah.
from More Perfect Union called BlackRock, The Conspiracies You Don't Know.
It's a great resource for this because it really cuts through a lot of that noise and helps us understand what BlackRock actually does,
Right.
and more importantly, how their actions might be impacting your life. Okay, so first things first, what is BlackRock?
Right.
I mean, they're an asset management firm, but what does that actually mean in the real world?
Sure. So imagine this. You're diligently saving for retirement.
Okay.
Right. You're putting money into your 401k
Yeah.
or a pension fund.
Right.
But those funds don't just sit in a vault, right?
Right.
They need to be invested to grow.
Yeah.
That's where BlackRock comes in. They take that money along with funds from institutions
Mm.
like insurance companies,
Yeah.
university endowments, and they invest it
Okay.
in a variety of assets, primarily stocks and bonds.
So they're like the ultimate middleman they're managing.
Right.
Trillions of dollars
Trillions.
on behalf of their clients, just aiming to make that money grow over time.
Yeah.
And we are talking about over $10 trillion.
It's a mind-boggling amount of money.
It's more than half of the entire U.S. GDP.
Yeah. And that's where things start to get interesting because where BlackRock invests has huge ripple effects
Right.
throughout the economy.
And one of their key strategies is investing in these things called index funds.
Right.
I've heard that term thrown around, but can you explain what makes them so special?
Absolutely.
Yeah.
So think of it like this. Instead of trying to pick individual winning stocks,
Right.
which can be risky, you're essentially betting on the entire stock market.
Okay.
So an index fund tracks a specific market index like the S&P 500,
Right.
which includes 500 of the largest U.S. companies.
Yeah.
So your money is spread across hundreds of companies, reducing your risk and providing more consistent returns over time.
It's kind of like diversifying your portfolio on a
Okay.
massive scale.
Exactly.
But what does this have to do with BlackRock's power?
Well, index funds have become incredibly popular,
Okay.
and BlackRock is the largest provider of them in the world.
Wow.
When you combine that with the sheer scale of their assets, you get something called universal ownership.
Okay, universal ownership sounds ominous.
Yeah.
What does that mean?
It means that BlackRock, by virtue of having to invest trillions of dollars, ends up owning a little piece of almost every publicly traded company out there.
Wow.
They're like a giant octopus with tentacles in every sector of the economy.
So it's not just that they're big, they're everywhere.
They're everywhere.
But if their strategy is mostly passive, meaning they buy and hold for the long term, how much power can they really wield?
That's a question a lot of people are asking. BlackRock argues that their passive approach means they're not actively trying to influence companies or manipulate markets. But critics point out that this passive label comes with some pretty significant advantages.
Like, what are we talking? Loopholes?
Well, yeah, for one, they avoid certain regulations that apply to banks or
Mhm.
more active investors.
Okay.
They're kind of in this gray area where they wield enormous financial power, but aren't subject to the same level of scrutiny.
So they get to play by a different set of rules, even though they're arguably just as influential, if not more so, than traditional financial institutions.
That's the argument. And there's another interesting wrinkle to this passive investing strategy: voting rights.
Okay.
When you own stock in a company, you typically get to vote on certain decisions,
Yeah.
like electing board members or approving mergers.
Right. It's that whole shareholder democracy idea,
Yes.
like where investors get a say in how the companies that they own are run.
Exactly. But when your money is managed by BlackRock, they inherit those voting rights.
Right.
So the question becomes, are they using those votes in a way that aligns with your best interests?
It's like that game of telephone where
Yeah.
the message gets distorted along the way. You start with individual investors who
Yeah.
want to have a say, but by the time it gets to BlackRock, is their voice even being heard?
That's the million-dollar question, and
Yeah.
one that we'll explore further as we continue our deep dive.
So we've got this massive company investing in everything, potentially wielding a lot of influence through voting rights, but also claiming to be passive.
Right.
Where do we go from here?
Well, now that we understand the basics of what BlackRock does and how they've amassed so much power, we need to look at the potential consequences of their actions. Are they contributing to economic inequality? Are they stifling competition? Are they influencing government policy in their favor?
These are some pretty big questions, and I'm definitely curious to hear what you have to say, so buckle up, listeners, because we're about to get into the really interesting stuff. So we've established that BlackRock is massive influential and potentially wielding a lot of power through their passive investing strategy. But what does this actually mean for us, for like everyday people?
That's the crucial question, isn't it? I mean, it's easy to get lost in the abstract world of finance and forget that these decisions have real-world consequences.
Totally. So let's get concrete here. What are some of the ways that BlackRock's power might be playing out in our lives, maybe even without us realizing it?
Well, one area where their influence is particularly noticeable is in the realm of competition,
Hmm.
or perhaps more accurately, the lack of competition,
You're saying BlackRock's dominance might actually be stifling competition.
potentially.
Yeah.
How does that work?
Think back to that concept of universal ownership,
Hmm.
right? BlackRock owns a piece of practically every major company in every sector. The More Perfect Union video gives a great example with athletic wear companies. BlackRock is a major shareholder in Nike, Adidas, Under Armour, all the big
So
players.
instead of these companies like battling it out, trying to undercut each other, win market share, they're all kind of coexisting peacefully.
In a sense, yes, because from BlackRock's perspective, it doesn't really matter who wins as long as they're profiting from all of them.
Right.
Why would they push for aggressive price competition that might erode profits when they're benefiting from the status quo?
Wow, that's such a fascinating point. It's like they're playing both sides of the field at the same time.
Right.
But what does that mean for consumers, for people who actually buy shoes and clothes?
What can mean higher prices for one thing?
Right.
If there's less pressure to compete, companies have less incentive to lower prices to attract customers. And fewer choices too, right? I mean, if there are fewer companies that are truly competing, then innovation might stagnate.
Absolutely.
We might not see as many new products or improvements because there's less of a need to like stand out from the crowd.
Exactly. And this dynamic isn't limited to just athletic wear. It plays out across various industries where BlackRock has significant holdings. Think about airlines, pharmaceuticals, even food companies.
It's a little unsettling to think that our choices as consumers and even like the prices we pay might be influenced by this behind the scenes power dynamic.
And it ties into another critical shift that happened in the corporate world, which the video highlights back in the 1980s. There was this big push to tie executive compensation directly to stock performance.
You're talking about like stock options and all that, where the CEO's pay is directly linked to how well the company's stock is doing.
Precisely. And while that might sound like a good way to align incentives, it created a powerful motivation to prioritize short-term profits above all else.
So if the stock price goes up, the CEO gets a fat bonus, even if it means cutting corners, squeezing workers, neglecting long-term investments.
Right. And who benefits most from those rising stock prices? The major shareholders, including, you guessed it, BlackRock.
It's like this feedback loop, isn't it? BlackRock benefits when companies prioritize shareholder profits, and companies are pressured to prioritize those profits because their executives are incentivized to make BlackRock happy.
It's a self-perpetuating cycle.
But where does that leave the average worker, the consumer, the community?
That's the question a lot of people are asking. Is this system, with its focus on maximizing shareholder value, actually serving the broader interests of society? Or is it contributing to some of the economic challenges we see today, like wage stagnation, rising inequality, and this lack of competition we've been talking about?
These are big systemic issues. So where does BlackRock fit into all of this? Are they the villains some make them out to be, or are they just playing by the rules of the game as it exists?
Well, the More Perfect Union video raises another intriguing and perhaps concerning aspect of BlackRock's power, their close relationship with the government.
Ah, yes. The infamous revolving door between Wall Street and Washington. We all know that money talks in politics. But how does this play out specifically with BlackRock?
There's a long history of BlackRock employees moving in and out of government positions, from the Treasury Department to the Federal Reserve and various regulatory agencies.
It's a little unnerving, frankly, to think about the potential for conflicts of interest there.
Yeah.
I mean, are these former BlackRock employees shaping policies that benefit their former employer?
It makes you wonder, and it goes both ways. Sometimes government officials move into high-paying positions at BlackRock after leaving public service. It creates this sort of cozy network where it's hard to tell where the line is between public service and private interests.
It's like they're blurring the lines between Wall Street and Washington. Are there any specific examples of this revolving door in action?
Well, one incident that raised eyebrows happened after the 2008 financial
Oh,
crisis. BlackRock was actually hired by the government to help manage the fallout, to advise on how to stabilize the financial system.
they were brought in to help clean up the mess that, in part, Wall Street had created.
It does seem a bit ironic.
It does.
And what's even more interesting is that BlackRock, while playing this advisory role, also lobbied successfully to avoid stricter regulations that were being considered in the wake of the crisis.
Wait, so they were advising the government on how to regulate the financial industry while simultaneously lobbying against those regulations?
It certainly raises questions about whose interests they were truly serving. Were they prioritizing the stability of the financial system as a whole, or were they looking out for their own bottom line, even if it meant potentially weakening regulations?
That's a pretty damning example of how BlackRock's influence might be shaping policies that could have far-reaching consequences for the entire economy. And it's not just a historical anecdote right now. There are ongoing efforts by agencies like the Consumer Financial Protection Bureau, the FDIC, to increase regulation on asset managers like BlackRock, especially those who have significant stakes in banks.
Right, so they're trying to close that passive investing loophole and hold BlackRock to the same standards as traditional financial institutions.
Exactly. But as you can imagine, BlackRock isn't too keen on the idea of more oversight. They're pushing back through lobbying efforts, arguing that they're already sufficiently regulated and that more rules would stifle innovation and harm investors. There's that classic corporate playbook: fight any attempt at regulation, even if it's meant to protect the system from another crisis.
Right.
But where does all of this leave us? I mean, it can feel a bit overwhelming to think about the scale of BlackRock's power and their potential influence on everything from the prices we pay to the laws that govern our economy.
It's true, it can feel daunting. But it's important to remember that we as citizens have a role to play in shaping the future of our economy. We can demand more transparency and accountability from powerful institutions like BlackRock. We can support policies that promote competition and protect consumers. And we can even start to imagine and advocate for alternative models that move beyond a purely profit-driven system.
That's a good point. It's easy to feel powerless in the face of these giant corporations, but ultimately they operate within a system that we as a society create and maintain.
That's right.
We have more power than we realize.
We do, and the More Perfect Union video actually points to some potential solutions that are being considered to address these concerns about BlackRock's power.
Okay, so deep breath, everyone. We've been spelunking, I guess, through the caverns of BlackRock's influence.
Yeah.
And it's a lot to process. They're huge, they're in everything, and their decisions ripple out in ways we might not even grasp.
Yeah, it's true. Understanding the scale and complexity of modern finance, it can feel like trying to map the universe. Vast, interconnected, and a bit awe-inspiring, even if a little intimidating.
Yeah. But before we descend into like existential dread here,
Right.
let's grab onto those solutions you mentioned. If BlackRock is this behemoth,
Right.
what are some practical steps to at least make sure their power is used responsibly or at least transparently?
Well, the More Perfect Union video points to some intriguing ideas. One that keeps popping up is increased transparency around their voting practices.
Oh, right. They inherit those voting rights from all the individual investors whose money they're managing.
Right.
But do we actually know what they're voting for in all those companies they own a piece of?
That's the crux of it. Some argue BlackRock should have to disclose much more clearly how they're voting and justify those decisions,
Okay.
based on the interests of the original investors, not just BlackRock's own profit goals.
It's like, if my retirement savings are part of that giant pool of money,
Right.
I deserve to know if BlackRock is voting in ways that benefit me, not just their bottom line.
Exactly. It's about ensuring accountability and aligning incentives. If they have to explain their voting rationale publicly, it might make them think twice about simply siding with corporate management all the time.
Okay, so more transparency. That's a good start. What else?
Well, remember that revolving door we discussed
Uh-huh.
with people hopping between BlackRock and government positions?
Right, yeah.
Well, there's a growing push to tighten the rules around that.
Makes sense. It's hard to trust the system if the people who are regulating BlackRock are the same ones who were working for BlackRock a few years back. So what would these tighter rules look like?
Think stricter lobbying limitations, longer cooling off periods before ex-government employees can take jobs at these firms, and maybe even mandatory disclosure of any potential conflicts of interest.
It's like building those ethical firewalls.
Right.
So we can be confident that decisions are being made for the right reasons, not just because someone's got a cushy job lined up on Wall Street, but are these solutions enough? I mean, some argue that BlackRock is just too big, too interconnected to regulate effectively.
That's where things get really interesting. Some economists and even politicians are floating the idea of, wait for it, breaking up BlackRock.
Hold on, break them up, like dismantle the whole thing. That seems drastic.
It's certainly a radical solution and one that would face fierce opposition. But the argument is that their size and universal ownership create these systemic risks.
Yeah.
If BlackRock stumbles, the entire economy could teeter. Breaking them into smaller, more specialized firms could, in theory, make the system more resilient.
It's like the too big to fail problem on steroids.
Yeah, right.
But wouldn't that just create a bunch of mini BlackRocks with the same incentives?
Right.
What about like more fundamental changes to how the whole system works?
That's the big question that the More Perfect Union video leaves us with. If the current model of shareholder capitalism, with its relentless focus on short-term profits, isn't serving everyone, what are the alternatives?
Yeah, we've been so laser focused on this one way of doing things. Maybe we've forgotten to ask if it's even the right way. So what other models are out there?
One idea gaining traction is stakeholder capitalism, where companies consider the interests of not just shareholders, but also employees, customers, the environment, the whole ecosystem they operate in.
So it's less about squeezing every last penny of profit and more about creating long-term value for all involved.
Right.
I like the sound of that. Are there any companies actually practicing this?
There are, and they're finding that taking care of their employees and communities can actually be good for business in the long run. Happy workers are productive workers, and a healthy planet is essential for any business to thrive.
It's almost like common sense.
It is.
But it feels so revolutionary because we've been so conditioned to think the only goal is maximizing shareholder return.
It's a paradigm shift for sure.
And there are even like more radical ideas out there, right? Like exploring models of economic democracy where workers have more ownership and control over the companies they work for.
Absolutely. The idea is to give those who create the value of the workers more say in how things are run, rather than concentrating power at the top.
I feel like we've journeyed from the depths of BlackRock's balance sheet to like the very soul of capitalism itself.
It's all connected.
It's been a mind-expanding deep dive. So what's the final takeaway for our listener? The person who's bravely listened to us ramble on about finance for this long.
I hope they come away feeling empowered, not overwhelmed. Knowledge is power. And now they have a deeper understanding of this financial giant, the potential pitfalls and the seeds of alternative models.
Exactly. This isn't about demonizing BlackRock or descending into those conspiracy theories. It's about understanding the system we live in, asking tough questions, and demanding better from those in power.
And maybe even daring to imagine a world where finance isn't just about extracting profit, but about creating a more just and sustainable future for everyone.
Beautifully said. Thank you for being our guide through this intricate landscape. And to you, our listener, thank you for diving deep with us. We hope this sparked your curiosity to learn more, engage in these conversations, and maybe even become a part of building that better future.